Back with first trades, 12,557. That momentum sure is intact with the Sensex up nearly 400 points in trade. And you've got a whole host of buzzers in trade, the hospitality, aviation stocks. Other than that, something like Phoenix Mills, Pfizer, of course, is very active. Delta, PVR, PTC, AU Small, RBL and IndusInd Bank are some of the high flyers. Well, let's get a move on and connect with the management of Equitas to talk about their outlook on restructuring, their Q2 updates, as well as view on credit growth. Joining in right now, we have with us Mr. P.N. Vasudevan. He's a Managing Director and CEO at Equitas Small Finance Bank. Thank you so much for taking time out. To begin with, Mr. Vasudevan, what has led to such a sharp jump in your retail term deposits? It's grown 98% on year, 14% sequentially. How has this contributed to your liability strength and your cost of funds?
Yeah, our retail term deposit has generally been growing at over 100% for the last 2 years continuously. So there's been always a strong momentum that we have seen in our retail TD book. What is really added to that in the last 2 quarters, the June quarter and now the September quarter, what's really added to that is our growth in Kasa also. Our Kasa was actually flat for about a year and odd earlier. It was just stuck around the 2200 crore level. But for the first time in June, we saw that moving to around 2400 crores. And in September, it's moved quite sharply up, nearly crossing the 3000 crore level. And today we have a Kasa ratio of around 25%. The reason for that growth is largely because we have been taking a lot of efforts and initiatives in terms of giving a channel approach to the whole Kasa mobilization. So we have kind of bifurcated the existing team into different channels, like our car channel, like our task channel, and the NRA channel. And the upper end of the savings account channel, which is our elite and wings. So that's how we are kind of bifurcated over the last maybe about 2-3 quarters. And there's been a lot of thrust in each of this. And we have really been introducing new products and services for these customers so that they kind of come in and they remain, committed to us.
Right. Can you tell us which segments look robust to you in terms of lending capabilities? You've also launched, the gold loan and the used car loan, and you've quickly managed to cross 50 crores over here. So what exactly is the game plan here on?
Yeah, see, both of them are leverage products for us because we have such a large branch network where we will start offering this product, these two products. Our commercial vehicle operates in about 200 branches. And so wherever our commercial vehicle finance staff operate, we are rolling out the users phase manner. And as far as gold loan, very high potential in-house demand, which is our microfinance and small business loan borrowers. So we have about 22 lakh microfinance borrowers and about 2.5 lakh small business loan customers. And our own data analysis on that set of customer indicates that nearly 35 to 40% of them have a gold loan with someone else. So that itself is a huge in-house potential. We don't have to actually go out looking for new customers. So the entire effort on gold loan is going to be one of cross-sell within our own client base. And we just launched it in a few branches. The traction has been very strong and good in the beginning. And now going forward, we should be launching it in more branches as we go by, with a large focus on our own existing client base. As far as used car is concerned, yes, it will be tagging along with our commercial vehicle branches. So we have a large kind of leveraging opportunity that exists on the used car also. So I think, yes, both of them will be a thrust product going forward, and I do hope to see a good traction as we go by.
Sure. Mr. Vasudevan, what's the outlook then on NPAs as well as restructuring, and how exactly do you see the subsequent provisioning shape up?
See, we have not received much of rescheduling requests. As of today, whatever rescheduling requests that we have received is hardly under 0.5% of the total advances equivalent value. There will be, I'm sure some more people will come up and ask for rescheduling as over this month and maybe next month also. But going by the initial request for rescheduling that we are receiving from the borrowers, we have a feeling that it may not be much. I mean, it might be 1%, maybe just cross 1%, maybe it might be 1.5%. But it looks like the early indications are that it might only be in that range as of now.
What then is the outlook on your NIMs, your ROA and ROE going forward?
Yeah, because you see, we did a COVID provision of 26 crore in Q2, and our ROEs are after that. Now going forward in Q3 and Q4, based on our current collection efficiencies and the trends that we are seeing, we don't expect any further COVID-related provisions coming up in Q3 and Q4. I think we are more or less through with our COVID provisions. And the 176 crores 170 crores that we have created of COVID provision over the last 3 quarters, I think that's a pretty strong level of provision that we have created. And the increase in NPA and the extra provision that we would be required to make in the third quarter, and mostly the third quarter should see most of the NPA coming through. Whatever will happen, and the fourth quarter maybe a few spillover might come through, but whatever be the additional provision required for that, I think we have the kitty of 170 odd crores, and I think that's more than enough. So I don't think we will be required to make any extra COVID related provision in Q3, Q4, and so hopefully that should help us sustain our performance.